Whether it's learning about earnings estimates, exploring the Zacks Rank, or adding to your financial toolkit, get the education and resources to help you become a more successful investor here on Investing the Zacks Way. You know, we've recently received questions from you about what to do with Zacks number 3 ranked stocks in your portfolios. In other words, should you truly hold them as the rating implies, or should you sell them and use that money to add new buy rated stocks to your portfolios? So when we saw those, we didn't waste any time. We called our editor-at-large, Steve Reitmeister, because we knew he had the answers for you to those questions, and he's here now to give them to you without any further hesitation, as they say. So, Steve, how should investors interpret the number 3 ranked hold stocks?
Yeah, it all depends on the investor's time horizon. Are they short-term traders for which the Zacks rank was built, for that 1 to 3 month time horizon? Or is it are they more of a longer-term investor and they're trying to figure out, the cycles that companies go through, and truly, does it mean I hold through this cycle, or maybe is it time to look for a better stock? So that's the key component that we're going to have to break down today.
All right, so first let's take a look at what to do with the number 3 ranked stocks for an investor with a short-term outlook. I assume we're talking about the more active traders here.
Yeah, absolutely. So we're talking about folks who have like a 1 to 3 month time horizon. They're always trying to be in the stocks that have the greatest timeliness, the greatest catalyst in which to move, and the Zacks rank has proven very effective in that regard. So the Zacks rank is a timeliness indicator that's looking at earnings estimate revisions and which stocks are going to have the most investor attention in them for the next couple months. So when you're trading with the Zacks rank, you are trying to buy Zacks number 1 ranked stocks, which are in the top 5% of those receiving earnings estimate revisions. Okay, when they fall to a 2, you still keep them because they're still in pretty good shape, because that keeps them in the top 20%. But when they fall to a 3, yes, the rating says hold, but because you're a short-term trader, that hold means the stock will be relatively in line with the market, yet you're trying to be very timely and outperform. So you're going to sell that stock and rotate that money back into another Zacks number 1 rank that has a greater likelihood of outperforming.
Okay. Let's shift gears a little bit now. Let's talk about what a long-term investor should do if one of their stocks falls to a Zacks rank number 3. First, though, could you clarify for us what time frame you're referring to for the longer term?
Yeah, it's funny, but people say, I'm a long-term investor, I hold for 2 months or longer. It's right. You're right. So it's all a matter of perspective. So if the Zacks rank for trading is really more about a 1 to 3 month time horizon, then technically speaking, we're saying 3+ months. But really, if we're talking about long-term investing, we're talking about buying stocks that are going to have multiple periods of strong earnings, and we're going to hold on to them for at least 6 to 12 months. So we're going to talk about the usage of earnings estimates in the Zacks rank for that longer-term time frame. All right. What you have to realize, again, the Zacks rank is built for the short term, and yet we have so many folks who just love the Zacks rank so much they want to know how to use it for the long term. That's one of the reasons why we created the Zacks recommendation, which was a separate recommendation which still was harnessing earnings estimate revisions, but was built to have a longer term rating. So if you're truly a long-term investor, then you should be interested in the Zacks recommendation. We have other videos talking about the difference between the Zacks rank and Zacks recommendation. I'm going to just say that, go take a look at that. But here again, if you're still saying, but, what do I do with the Zacks rank? Because I love following the Zacks rank. Okay. If that is the case, we have to take it back to the beginning of how the Zacks rank was created. I'm going to give the quickie version of that. So Len Zacks, his theory was if you could find indicators of stocks that are more likely to have a positive surprise and be in those stocks, and more likely to have negative surprises or earnings surprises and be out of those stocks, you had a great advantage over other investors. So the 4 elements he found: agreement, magnitude, upside, and surprise, 3 measures of estimate revisions, and 1 measure of past earnings surprises. Those were the most indicative of stocks that were more likely to have positive surprise in the future. Okay. So when you put that into mind, now let's take a look at 3 different scenarios of how a stock might be a Zacks rank of 3 and how we would react to that information. Okay. The first being you buy a stock that is a Zacks number 1 rank, and now sorry, Zacks number 1 rank, mostly because probably had a very strong earnings announcement. The brokerage analysts revised the estimates to put in the top 5% of all stocks. Very attractive, you get into the stock. Now, let's say 60 days later, there's no new information on the stock. Earnings estimates don't move at all. The way the Zacks Rank calculates things, if after 60 days there's no change in estimates, is as if nothing's happened at all. So the 60-day window is closed, the stock will be considered to have no change in estimates and will fall to a Zacks Rank of 3. That's not so bad because here again, given what I said about why Len Zacks created this the way he did, stocks that recently had positive estimate revisions, meaning within the last quarter, are more likely to have another positive earnings surprise. So this company that fell to a Zacks Rank of 3 only because it wasn't new estimate revisions still has some of that potency in there, some of that agreement and magnitude upside and surprise elements. So you do hold that stock waiting for the next earnings announcement because there is a much greater likelihood that it will have a positive surprise. You own that, you enjoy the ride up when that thing does surprise. Okay. So that's one. 2 more to go. Okay. So the next one is that you buy a stock that's a Zacks Rank of 1 because it probably had positive earnings surprise and so on. And now we're moving forward 90 days to the next earnings cycle. Next earnings announcement comes out. It's just kind of an all right kind of earnings announcement. And afterwards, analysts are like, there's no reason to change estimates. In this scenario, because there's a lack of new estimates coming out for the stock after the earnings report and the stock remains a rank of 3, yes, you could hold on, but it's only going to be in line with the overall market. I would rather people switch out to a stock that's a Zacks Rank 1 or 2 because it's much more likely to outperform the market over the next 3 months, plus much more likely to have a positive surprise in the next quarter and continue that cycle and be that more attractive long-term position.
Does that situation present itself frequently?
Yeah, it happens all the time. Yeah, and so here again, the Zacks Rank is a timeliness indicator, and when the story dries up, it's basically saying move on. Okay, but you can have a stock that has many, many quarters of positive surprises, positive estimate revisions, and that is how we apply the Zacks Rank for a long-term situation. But once that company stops providing the positive surprise and the analysts stop revising the estimates upwards, it's basically saying there's no real catalyst here. There's no reason to stay in this stock, so we move on. So rotating to that third reason or third way in which a stock could be a Zacks Rank of 3 and how to interpret that. Mm-hmm. It is very hard for a large cap stock to have a Zacks Rank of 1 or 2 because it's like, why is a cheetah faster than an elephant? It's smaller, it can be more nimble, things of that nature. It's just harder for a large company to have such surprising earnings and estimates be so much greater than what was previously expected. So when a large cap stock slips into a number 3 rating, we have to realize the number 3 rating is stocks between the 21st best earnings estimates, like 21st percentile and 80th percentile. It's the big middle part of the bell curve. Okay? It is fair to say that a stock that's in the 21st percentile of positive estimate revisions is better off than one at the 80th percentile. And in almost every spot in between. So the 25th percentile is better than the 30th percentile and so on. So the point is, if you have a large cap stock that's a Zacks Rank of 3, if you take a look at the actual movement of the earnings estimates, if you still see they're going up, okay, so it just may even be a modest amount. You know that it's a Zacks Rank 3 only because it's a large cap, only because it didn't move that much, but it's still attractive, okay, for a large cap stock. If you're looking at small cap stocks, there's not much of a reason to have a Zacks Rank of 3 because there's so many that would have a Zacks Rank of 1 or 2.
All right. Well, hopefully those answers to those questions have helped you and provided you with more information and guidance when you are investing the Zacks way. With Steve Reitmeister, I'm Terry Ruffalo.